What's going on, everybody? Welcome to the channel. This is Fernando Corona talking about how to analyze the Padsplit deal. This is our deal analyzer. I'm going to be sharing it with all of you guys. Just go ahead and add me on Instagram and then DM me, deal analyzer Padsplit, and we will get this sent over to you in those DMs. All right, I'm going to go through this on how we structure all of these. If you're first getting into this, these are the basics on how to analyze a Padsplit. This is a simple deal analysis, so this isn't going to be a BRRRR, it's not going to be a flip into a Padsplit, it's not going to be interest-only payment style. These are the basics on how to analyze a Padsplit, and then you can get more creative. I do have a more advanced sheet, but for now, this is going to be the basic, okay? To start off, we always put the address here in at the top, just so we know what subject property we're dealing with. If this is your guys' sheet, I also always put the address down here in the tab. I don't like having 100 different Google Sheets for every property. Trust me, it's gonna be a massive headache. It's better just to take this, duplicate that, and then as it gets duplicated, you just change this, rename property XYZ, and then up here, same thing, property XYZ. And this is super simple, but I'm doing this because it's just organization. All right, and then we get into the details now. So purchase price is obviously what you're buying the property for. So if you're buying it for 230 grand, how much improvements on top of the purchase price are you going to be putting into it? So in this case, it could be 30, it could be 40, it could be 55. This is actually an example of one of the homes that we bought. Purchase price was 230 grand. Improvements were 55 grand. And I knew closing costs here, we're estimating 3%, usually 3% of the purchase price. So I'm getting into the details so you guys can actually see why this is so. You can see D3 up here. D3 is the purchase price, so 0.03, which is 3% of the purchase price. That's how you get that. You got your miscellaneous costs. So this was, I'm gonna remove the 4,000. I actually don't think we need that right now. So yeah, it was this 710. That included appraisal, flood certificate, appraisal management fee. That was 710 bucks. Holding costs for this, I'm usually doubling the mortgage payment. So I'll usually do this. And that's kind of what I'll gauge as my holding costs, so that, you know, when you acquire the property and you are fixing it up and then how long it's going to take for people to move in, I'm putting it, that's going to be like 2 months. And then closing cost coverage, this is if somebody, like if you're closing and you get some credit back, you can put it here, you know, just put the negative of this. And so this could be 0. You know, you're probably going to be analyzing this as if it's 0. So we did end up getting coverage. That's why I put that number in there. Down payment, this is going to depend on the type of financing. If you're doing a vacation home loan type of financing, that's 10%. If you're doing a conventional investment property, then it's 15 to 20%. So we'll just go 20% in here. No, this doesn't look something seen. Oh no, we did 10%, that's right. So when we bought this property, we bought it with 10% down. Actually, our total cash in was like 85 grand. But let's change up a couple of these numbers so it could be a little bit more realistic to other people who may not be buying with a vacation home loan. So they might be buying with 20% down in this type of scenario. And they might be buying right now with 6% interest. Now, you can see like it's still not bad. Even with our current numbers, this is what we're currently renting our property for. This is not how I run numbers, but this is how I'll show you guys how I run numbers right now. But if it's 20%, then there's no PMI. There's only PMI if it's a conventional loan and it's under 15% down payment. Once you get to 20%, there's no PMI, so you don't have to worry about that. And honestly, there are 40-year loans as well. So sometimes this could be 6.5. I'm telling you, there's so many ways to get creative with this deal analysis, but it all depends on the tools you have in your tool belt. If you know all your different ways of financing, then you know what lenders to go to. So that way you can make your numbers work. You could see when I do a 40-year mortgage my cash ROI goes up significantly. And then imagine now this is the first 10 years are interest only. This is only going to go up even more. And because I'm getting more money up front in those first 10 years, and I could pay the debt off in the future. So the way that I typically like to analyze deals is 150s. I'll do four rooms at 150, and I'll do 4 rooms at 155. This is usually how I'm analyzing the deal. Here, I can still do it at 30 years. Right now, because of interest rates, I'm doing it at 6.5%. My goal is to be conservative and have this be above 15% cash on cash ROI. Okay, that's conservatively. Then that means that I know conservatively I can at least hit 15% cash on cash. Like I just showed you, if this was, this is the property, how it's performing now, I'm over 20%. And so I'm going to try to be conservative here when I talk to you guys. And that way you should be running them similarly. Some people like to do 15% vacancy. And if you want to be ultra conservative, you know, we've been running it for a year and a half now. I think 10% is reasonable. You don't have to be super conservative at that 15 mark, because we've already seen how some of our properties have been doing. All right, we go to property taxes in Atlanta. This is specifically for Atlanta. You're going to have to know your tax rate in whatever state you're looking in, whatever market you're exploring. But for us, it's 1.7% is the typical tax rate for the year. Insurance, for insurance, this is actually how much we're paying per month for the property that I was analyzing. It's $150. So you can analyze this. One property we're paying $100 for. This one we're paying $150. I would keep it at 150. I think that's, and you guys could message me as well if you want to know who my insurance person is. I'm happy to make that introduction. Maintenance and repairs, we save away $200 a month. Last year we did have, I think we had $2,600 in repairs. So it took like a year and a half of, like, let's say, a budget. So this is how we came up with the 200. So in the past year we spent $2,600. So 2,600, let's say, divided by 12 is $216. So we just basically put $200 here for maintenance and repairs per month. That's what we're estimating if we were, on reserves. For utilities, this is usually $300 to $500. And again, that's a lot of that's going to depend where you guys are at. We put 300 because that's what our last house was doing. So that's how we were estimating this one. Lawn care, we talk to our property manager. We say, hey, how much is lawn care per month? I think we're taking care of it once a month. It's $100. Administrative, this is 12% of the gross income. So E19, and this should actually be less. This should be E22. The number actually goes down, which means that goes up. And the reason why that is so is because Padsplit takes the money that their platform actually grabs onto. So before I was just doing it a rental income. Again, for me, that was just being conservative, but realistically, it's a percentage of the gross income, because if it's vacant, then they can't charge you for that. So it should be of this number here. And that is E22. Same thing with this one. This should be E22. Yep. So your property manager takes 8%. That's standard. I think that's a good one. PMI. So if you were to add PMI here, then that would get added down there. But if there's no PMI, then you put that away. Hazardous insurance for us, hazardous insurance, we have to pay like $60 a month too. And the way that this works, if I can go into more detail here, the rental income, this is a rent by the week model. And then it goes into this monthly rent. All right, let's go down here first. So these are 8 rooms, and then down here I add them up and I multiply it by 4.3. So people ask me, well, why do you multiply by 4.3? That's because if you do 52 weeks, okay, divided by 12, 52 divided by 12, you're actually getting 4.3333. Why is that? Why are we doing that? Because Padsplit collects rents weekly. They don't collect rents monthly. So that means, and we also rent by the week. So a tenant could stay there for 2 weeks of the month, 3 weeks of the month, 1 week of the month, right? You don't know when they're gonna leave, but we multiply by 4.3 because that gives us the full 52 weeks. That is the most accurate way to analyze the deal. Some people will put 4 or 12 months. You could do that too, but it's just not being as accurate with your vacancy rates and all this stuff. So that's the way that we analyze it, and that's the way we recommend, because again, it is a rent by the week model. The first 30 days, the tenant has to stay at least for 30 days. So they do have that minimum. The first 30 days they have to stay for, and then it goes week by week. So that monthly rent comes down here. So rental income, then it takes the vacancy rate that we get from here. It's just subtracting the vacancy number, gross income, property taxes and insurance. You're not going to see me deduct it in this number here. This, which is total expenses, is just grabbing onto all these other expenses. It's not taking into account property tax and insurance, because this mortgage payment here already takes into account your property taxes and insurance. So you can see if all this junk, and you can see me grab onto both of these. So if you want to explore how I created that, you're welcome to. You can also test this against other mortgage calculators to see how it is. Just so you guys know, property taxes and insurance is included in this mortgage payment. All right, so we go down. This is your annual expenses, this is your monthly expenses, and this is your total net operating income, which is just subtracting your gross income after vacancies in the year, subtracted by your total expenses in that year. All right, that's how we're getting net operating income. And we take that net operating income, just drop it in there. And this is how we're getting our monthly, just divided by 12, right? This is what our monthly cash flow is. And first mortgage, just bringing that in from the mortgage payment up here. This is how we land on total cash flow, $1,300. That's how you run these deals. That's how you run these numbers. The rest of this stuff, year 1 to year 30, this is all if you wanted to see how things would progress over the years. If you wanted to see what your total equity, pay down was, or total equity accrued, then you get to see this is your loan amount percentage, right? So you still have 79% loan to value, 78%, so on and so forth. When you goes all the way to the right, you're obviously at 0% loan at year 30. To be honest, I don't really use everything to the right of this. That was something that we initially created thinking maybe we'd use it, and we don't. Okay, so we have officially gone through and taught you how to use this sheet. I wanted to teach you guys something about Zillow. So let's say you're on Zillow. And you go to home type. If you're in Zillow, this is what you're doing. You can do this. Go to more. So specifically in keywords, I'll type in split level and hit done. This is like one search that I do. Go to for sale, and you can start to see these different properties. Let's say this one right here. So this one is 365, 325. Let's do this 215. This actually isn't a bad house. I'm actually going to be looking at this. Okay, so welcome home. This is a nice split level single family homes located in quiet neighborhoods. Our house is renovated, new flooring and all that stuff. Okay, down at the bottom, a few things I check. So I want to see if it has central air. I want to see if it's public sewer, if it's on septic. I want to make sure it has no HOA. And then down here, I mean, checking out the previous price history is interesting. So you can see what it's listed for sale at, when it's sold. I mean, crazy, right? Sold for 85 grand back in 2020. And so here, principal and interest, you could see mortgage insurance here, home insurance, 75 bucks per month. So here they're saying 75 bucks a month, but they're not considering that it's a pad split. So this is if it was a regular home. when you're looking for insurance for these types of homes, I suggest that you be really honest with your home insurance company. Just let them know that you are renting by the room, and that way that they can quote you accurately. So right now we're getting quoted $150 a month. You can also get your property taxes per year. Again, it's at 1.07%. But whether you're buying in Atlanta or somewhere else, this is something that you can do to find the insurance estimates and the property taxes estimate. Yeah, the other thing you can do quickly is you basically grab this, go to Google Maps, and just drop it in here. This is for Padsplit because 50% of Padsplitters don't have a car. So you want to be, by being closer to transit, then you are going to have more opportunity to book people there. And so you can see this is like 30-minute walk. So that means that that's a lot of walking. 48-minute walk, 44-minute walk, 36-minute walk. So if I click into the details, yeah, 30 minutes to walk to the nearest bus stop. So if I were to get this property and really explore it, most likely this has to have a ton of parking available. This one's 17-minute walk. So it's not but 17 minutes is still a long time. It's a walk. But I'm not going to be expecting that everybody here is going to be, in transit. They're all going to want to have a car, or some of them are going to want to have cars. So now I need to check this home to see, okay, how many carports are there and how much parking is on the street. Let's check out the street view. So like, see, this only has one carport, and I mean, I guess it does have parking. 1, 2, 3, 4. Yeah, so that just parking would be difficult here. Unless you allow people to start parking on the lawn. Let me see, you could get, maybe have somebody park here and here. If you open up the driveway space, then you can have 3. So if I'm going to drop this video into the how to use section, so that way when you also ask for me or ask for this, you have that video to reference. Sorry, the other thing to do is quickly do a file, make a copy, because you're only going to have view access to this. If you have any questions, DM me on Instagram or comment on this video, and looking forward to helping you out. All right, take care, guys.